well. And then from the F&O pack, we have HFCL, which too is doing fairly well. But let's go across to the management of United Breweries. The company reported their numbers. It was slightly soft. In fact, we did see some weakness in, the volume and the margins as well. So let's go across to the management. Vivek Gupta, the MD CEO, now joins in. Thanks a lot, Mr. Gupta, for joining in. If you could give us a detailed breakdown of the quarter that was, because there were a fair amount of disruptions. On the one hand, there was higher than expected monsoons. Then there were some state-related tailwinds and headwinds. You got a price hike in Telangana. And at the same time, your own premium push. So if you could break down how the quarter went by before telling us about the quarters ahead.
I would say that, the quarter was, if I split it into three parts, 1/3 of our business actually grew more than 15%. There are states like Andhra, Assam, Jharkhand. We saw a significant growth. So 1/3 of our business where there was less monsoon impact, good positive excise policy. Maharashtra is one of the examples. We continue to see more than 15% of the growth. 1/3 of the business got impacted by rain, specifically in the north. So Punjab and Haryana, in few months, the category was actually down 40% because 3 of our breweries were also flooded. And then I would say 25 to 30% of the business got really impacted by affordability. So states like West Bengal, Orissa, Karnataka, the beer has become so expensive, and I've been consistently repeating that affordability is the biggest challenge on the category. And we are now seeing that consumers are either switching to IMFL or consuming less beer in these states. So going forward, of course, we hope that weather is more graceful to us, though I hear that coming winters are going to be even stronger because of La Nina impact in north, and we will see that. But structurally, I feel very positive about the momentum we are seeing in the first 35-40% of our business, like Maharashtra, Assam, Northeast, in these states. And then on where the weather had an impact, we should see some recovery. On the other states, we continuously work with the regulators to provide them data information, because in states like Karnataka, their excise revenue is getting hurt because of the beer becoming so expensive. So we hope that, we will be able to get some positive recommendations and actions from the regulators in the coming months. But that is why the business is quite mixed right now.
All right, so 1/3 of the business grew over 15%, and the next 2/3 got impacted by the weather and regulatory challenges, respectively. But the third quarter, and because you alluded to La Nina, how the next couple of quarters coming along? It's not stopped raining in November yet. So are beer sales picking up, or are they still stagnating?
If I have to be looking at the data and what I'm observing right now, even October, there were almost 12% more rainfall than average in the country to do that. And this time, both the big festivals, Dussehra and Diwali, has come early in October. And with the La Nina impact, predicted in North, I think the recovery to 5 to 6% volume growth in the category is probably a quarter away. However, we do feel that there is momentum on the business in the pockets of the country, and we hope that will yield a positive impact. We also know that our business, especially on premium, grew 17%, and in the first half, it has grown 33%. And we know it got impacted a lot because of logistics and rains. So we hope that momentum will continue as there is an underlying consumer demand. There is expected to be a positive impact of GST changes also on the consumer choices. So we hope with the coming festive season of especially New Year and celebrations, a lot of sports also happening, we hope the momentum will pick up, but I see the 5 to 6% growth is probably a quarter away.
5 to 6% growth is probably a quarter away. But let me ask you this straight. You're going into the third quarter with an 8% volume growth as a base. Given the weather and given the sort of challenges that you're facing, is there a risk that third quarter volumes will be negative, or you're short of positive volume growth in the third quarter?
See, we are only 1/3 into the quarter. We have just finished the October month. I'm quite positive we are going to, it will not be in a negative base unless some external situations happen which we don't predict. I expect the premium business to bounce back again and grow more than 30%. Our premium brand fundamentals are extremely strong. Last week, we actually got data on brand power, and our brands Ultra and Ultra Max hit one of the max, brand power scores. So our brand fundamentals are very strong. We also made a strategic choice in September and August, despite whether to continue our investments. If you see, our brand investments actually went up by 22%. Our coolers are now in 37,000 stores, which used to be in 15,000 stores. So we are actually investing in brand fundamentals. We are investing in service to the customers. Our portfolio is extremely strong. Heineken Silver is growing 34%. So I definitely expect a very strong recovery on premium because our goal is to grow 30% quarter on quarter on premium. So we will have a very strong quarter on premium. Um, how much weather impacts happen, it is anyone's guess right now because it's so unpredictable. But our fundamentals, we hope, are going to be much stronger. And at the same time, we're also doing some work on productivity and cost efficiencies as well to variabilize some of our fixed cost so that we can also absorb some of these shocks better going forward.
Interesting there, Mr. Gupta. But, obviously, what is it going to be in terms of bottle returns as well? Volumes, you're not worried that you'll see a negative impact in Q3, but bottle returns in Q2, what was that? And what is the target now that you're keeping an eye out on?
We are gradually seeing the progress on bottle returns. Our bottle returns, even in the last quarter, are better, despite our gross margins being lower, are better versus the previous quarter. So we have made operational discipline, we have made structural investments there, and that are working. And we are also putting some specialist focus on the or district-wise focus in the country, because there are some districts where the bottle return is as low as single digit. So we are creating a good infrastructure there. So there's a lot of work happening on bottle returns. But as you mentioned, we continue to invest in new bottles in the premium. But the good news is, because of localization of premium is now we are almost through in 80% of our portfolio. We are seeing a gross margin recovery on premium from this quarter onwards. So we always had a gap in the gross margins on premium versus mainstream because we are putting new bottles. It was not local production. So at least the local production part is almost done. And we will see a good pickup in our gross margins on premium going forward.
So then let's take that point forward itself. Vivek, what's your outlook on margins from here? There was a sharp decline in the second quarter, understandably because of the revenue decline as well. Do we see them going to double digits soon?
I think one is the raw material is getting predictable, but we know that recently government has announced the MSP increase on barley by 8%. We know the inflationary pressure on aluminium cans, in particular, as cans are growing in the salience. So we expect, the commodities to be volatile, and we see the inflationary pressures coming. Now, at the same time, we will need to continue to do the cost initiatives. We need to take the pricing because we did get the pricing in Telangana. But as you remember, we didn't get the pricing what we were expecting to make the business to a green level. So we will have to continue to work with the state governments to get the right pricing, but at the same time to reduce taxation. Because increasing pricing, the every 1 rupee price increase they give to us is actually 4 rupees they charge to the consumer. So consumer, we need to make sure affordability doesn't get impacted. So it's a tough equation where we need to manage the cost, we need to manage our revenues. At the same time, we need to make sure the affordability doesn't become a big issue to consumer. So we are actually doing a lot of cost initiatives, productivity initiatives, leveraging our scale for better sourcing. At the same time, as I mentioned, our premium mix will continue to increase. That should help us with this stuff. And last but not the least, I think it's a highly capital intensive category, the beer category. So the volume is the king. So eventually, if volume recovery is going to help our margins and better utilization of our fixed cost, because this quarter, one of the reasons our gross margins got impacted because our own breweries in the states which got impacted either by affordability or rains had less capacity utilization. So eventually, if we utilize more capacities, our fixed costs get better utilized, and the margins, it improves the margins as well. So finally, we have to get back to growth and not lose the momentum, and that is our focus as a category maker.
Right, and just the last question from my side, your market share, because in Q1 you had mentioned that you had gained around 300 basis point, more than 300 basis point in terms of market share in Q1. Premium also had seen some growth there. So now what is your overall market share and what is the outlook there?
Yeah, so this is a positive story. We continue to grow overall market share. Based on our validated data in this quarter itself, we grew almost 97 basis point of market share, which is quite phenomenal, because in the full first half, now market share gains are more than 100 basis point at an overall national basis. On premium, again, we continue to grow market share. We have almost touched now 20 market share and above in certain as per the data we have. So market share is absolutely not a problem right now. We continue to grow. But as I said, our key role as United Breweries is to grow the category. I'll be happy if the category grows faster and we can fight out the market share game later. But right now, it's a positive story on market share.
Right, positive in the market share, but the underlying is always to grow the category and then thereafter fight for market share. Wish you good luck for the remainder of this year and thereafter as well on your structural uptrend journey in the beer category for the nation. Thank you, Vivek. With that, let's give a quick note to our viewers. As you can see on the screen, there is a Money Control stock score, which is just above the line graph. This is a score which is assigned to each stock based on the Money Control multi-factor algorithm calculated by analyzing over 40 parameters, which include both current and historical financial statements, price charts, and technical indicators for each stock. Each of these individual parameters then considered for calculation of the 4 factors, which are then assigned a Q score, G score, V score, and T factor score. Remember, this is not a buy or a sell recommendation. It's any investor who has a view or is wanting to make an action is allowed to do the necessary diligence on their own through a certified registered professional or a financial advisor for their investment decisions.